The Magnificent Seven stocks lead NASDAQ sharply lower, down to the first support. I'll explain what I mean. We're seeing also a bearish engulfing pattern on the chart of S&P 500, and this is a weekly chart, so it is meaningful. Gold did hit all-time highs, but so far has failed to close above there at those levels, forming what's called a shooting star candlestick. We'll see if that means anything. And I think oil is headed for a retest of the low 70s. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, July 19th, 2024. Please don't forget to hit the like button, subscribe to this channel, share this video, make a comment, or ask any questions that you like in the comments section. If you're a subscriber, stay tuned. We'll be covering a lot of stocks and various securities in the members only video, namely market breadths, junk debt, copper, natural gas, Bitcoin, and Ethereum will all be covered in the members only section, in addition to ETFs, large cap stocks, as well as quite a bit of various speculative securities. For example, new additions this week are Maravai, LifeSciences, Joby Aviation again, DocuSign, and Sunrun. This is Rivian as well, so we'll be looking at those Rexford Industrial Realty as well. So several new stocks as well as gold related. If you're not yet a subscriber, consider signing up by going to the link in the description, MasterChartsTrading.com. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart. This green, blue, red, and yellow lines. They are available for tradingview.com. Ask me how to get them. It's really easy. All right, this week we will look first at NASDAQ QQQ. So notice what happened to NASDAQ. We made an all-time high on this 2 days, July 11th, last Thursday, and pretty much sold off in this wave-like fashion since then. There is also a gap here between 16th of July and 17th of July, so between Tuesday and Wednesday of this week. So it's a gap down. Eventually it will need to be filled, but again, we don't really know when it will be filled. So for example, you can see there are several gaps that are not yet filled on NASDAQ chart and QQQ chart. One is between May 2nd and 3rd, and then another between 12th and 11th of June. So currently NASDAQ is down to the first support, and this is a green line. So first support, quite often we see buying at this level. So for example, this was a perfect example of what happened of such an event. In March we pulled back towards this green support resistance line, and in mid-April we sort of pierced through it, bottomed around it, and then rallied again to the new all-time highs. Will we have something similar? No way to know this. However, if you're a subscriber, make sure to stay tuned, because we'll be covering market breadth, including such indicators as put to call ratio, which is screaming that we're about to see a correction. So stay tuned for that. So perhaps we are already seeing this corrective action. Now this corrective action is just that. It's correction within a bigger uptrend. Uptrend is not intact. For the uptrend to be in any sort of danger, the price needs to drop from today's levels to at least this red line, which is about 16% down from today's levels. And to enter a bear market or a downtrend, the price needs to drop towards the yellow line, which is around 22%, almost 23% down from today's prices. So as of right this instant, we're seeing a garden variety pullback. How deep of a pullback it will be, again, nobody knows. So notice somewhat of a similar, I mean, they're all similar, but a pattern here back in July of last year, 2023. We pulled back towards the green line, tried to rally, did not make a new record. Again, pulled back towards the green line, tried to rally, did not make a new record. Pulled back even deeper, almost towards the blue support resistance line, and I would have been strongly considering buying it there. But notice that actually didn't even make it that low. And then we just rallied to new records. So something of that nature is entirely possible. Additionally, because of the way the market breadth is right now, because of the way the especially put to call ratio is just absurdly in favor of calls, we may see a deeper pullback until that corrective action is done. So August, September generally is a weaker month for stocks, so perhaps we'll be seeing some sort of a corrective action into August, September. So I wanted to highlight the reason why QQQ, NASDAQ, has been pulling back sharply so much, and that of course is because of the Magnificent Seven. This is an actual ETF. They decided to make an ETF out of the 7 most coolest and beautiful technology stocks. How long is this going to continue? Are they going to change the stocks? Maybe they will eventually. What if Nvidia, I don't know, goes out of business? Will this be still magnificent? And notice that we don't want to have my lines yet because I need 250 days. The lines need 250 days to even begin to paint, to appear on the chart. So Magnificent Seven, notice here on the Thursday 11th of July, there's that same Thursday 11th of July on NASDAQ QQQ. This is not a big deal. However, on Magnificent Seven, you can see that this was a big deal, big drop. So back then I was like already wondering what is going on here. If Magnificent Seven, or the generals, so to speak, are fleeing, perhaps we will be seeing more corrective action. I was correct at the time. However, notice on this day, on July 11th, what happened to the equal weight ETF. So there's July 11th right there where I'm hovering, Thursday, that's last Thursday. So equal weight ETF, RSP, is just that. It rates all of the stocks within the S&P 500 equally. And the fact that on the day when Magnificent Seven dropped bigly, the average stock within the S&P 500 actually gained, and the index itself gained. And notice that the equal weight ETF has been moving higher, while the Magnificent Seven actually has been moving lower. Okay, so that's a divergence. Who do we believe? Do we believe the average stock within the S&P 500, or do we believe the 7 big stocks? I don't know. You tell me. Make a comment. If you had a just decision to make right now, who would you believe more? Would you believe the 7 generals, or would you believe 493 other stocks within the S&P 500? And NASDAQ is, composed. I mean, they're very similar as far as correlations are concerned. So even though Magnificent Seven is just 7 stocks, the correlation between the S&P 500, the QQQ, and the equal weight ETF are very high. So if one does one thing, the other should follow. As of right this instant, I have a feeling we will try to make a new record before we will begin correcting further. So perhaps something like this might unfold, like I already showed. That happened back in July of last year. We will pull back, at least attempt to rally, but we may or may not make it. So this is the important thing, is that right now we're watching, first of all, for the index to stop dropping, for QQQ to stop dropping. So perhaps something of this nature will, like, it will no longer continue lower. We'll see some sort of a pattern, like for example a hammer candlestick, a bullish engulfing pattern of some sort, any one of the bullish candlestick patterns. And perhaps we will see this gap between the July 16th and 17th filled before we make potentially new, moving lower. If indeed we do move lower, then the blue support resistance line would be just a great place to look for a buying opportunity. So we're not that far off. We're only about 6.5% away from the area where I would be considering, to jump in, basically. As I just showed you, there was no opportunity, like right there in October of last year. We came close, but we didn't actually touch the blue support resistance line. So if we get to the blue support resistance line, it will be the first opportunity since April of 2023 to actually buy at a relatively low risk. All right, so that's NASDAQ with Magnificent 7. Let's move on to our good old S&P 500. So good old S&P 500 is also market capitalization based, and within the S&P 500 you can look for SPY holdings. We can see what are the SPY holdings. Major top 10 holdings are Apple, Nvidia, Amazon, Meta, Tesla, as well as Microsoft, and Google, some other ones, Berkshire Hathaway, etc. So very similar composition, not as big of a proportion as in QQQ or on Magnificent 7, but still very top heavy. So like the top 10 stocks within the S&P 500 comprise, this is like 13, 20, like over 25%, I would say. So a quarter of the S&P 500 is concentrated at the top 10 stocks. That's very top heavy. Okay, so again, this is the reason why we're seeing a pullback for S&P 500. But if we look at RSP, equal weight ETF, that pullback is muted and only occurred the last 2 days. And I will show you small caps, IWM, and small caps indeed have pulled back in the past 3 days, but notice that this is the reason why the equal weight ETF skyrocketed higher. Notice how high this several days just non-stop moving higher from July 10th until July 16th, even July 17th. So small caps contributed strongly because of the sheer volume of them. There are so many small and medium capitalization stocks moving higher that the top heavy S&P 500 did not, or the top heavy S&P 500 did not begin to feel it until the rest of the market, the small caps and the medium caps, decided to start falling as well. So at this point, we're waiting for, S&P 500 is actually not even down to the green line. Notice what happened back in the April. It took a little while for the correction to get to the green support resistance line. So we're not even there yet. QQQ is already there, NASDAQ is already there, but it is more volatile. So it's normal for QQQ to kind of be outperforming to the upside, but sometimes it does the opposite. It outperforms to the downside. So for now, let's wait and see what happens. I have a suspicion that if S&P 500 gets to this green support resistance line, which is currently at 5,400 or so, which is literally 1.5% away, I think at least an attempt to bounce higher will be made. So we'll be watching this quite closely. Okay, let's switch gears. We're currently looking at dollar currency index, DXY. So we're still struggling either way. So technically speaking, dollar is still in an uptrend. Notice this upward facing arrows, where the close is above the blue support resistance line. There was not yet a close below the red line, meaning that we're still thinking that the dollar currency index is in an uptrend. We're thinking about buying it. However, there are some currencies, namely euro, which has actually broken out into an uptrend, as well as British pound. The other currencies are underperforming. So overall, dollar is struggling to find the direction. I guess that's the best way to put it. But you know, if it continues lower, if dollar comes under further pressure, then gold should benefit, and gold and dollar quite often move in the opposite direction, but not always. So let's look at gold. Gold has been indeed taking advantage of dollar relative weakness. So the weakness began here in late June and continued basically until now. Gold has indeed been taking advantage of that from like late June, a nice big surge. We made a new record, closed at new records on July 16th, on Tuesday of this week. I want you to see the same chart but on weekly time frame. So XAU divided by USD, gold spot in US dollars, and this is a weekly chart. To change the interval, you need to change this time frame. If you're using my indicators, again, don't forget to change the length to 52. There are 52 weeks in a year. Okay, so right now we're looking at XAU USD gold. So notice this last candle from this week. So this is a clear example of a shooting star candlestick. We have a very large tail out of the top, or shadow out of the top. We have a red body. In other words, open is above the close. Close was below the open. Very low, very small shadow out of the bottom. So classic shooting star candlestick. Additionally, you can see there is multiple shadows out of the top for some weeks since April. This is April 8th, April 15th. Another one from April 20th. So there's resistance up here. Resistance in this area of about 24 and a half or so, 2,480. I think this is not a great looking candle for a weekly chart, so I think a pullback will likely occur next week, or rather it will continue next week. For now, gold is in an uptrend. Notice this upward facing arrows. We were buying gold. The uptrend began in January of this year, and notice uptrend. So all we do is we wait for a pullback towards the blue line. That's all we need to know. Once we have a pullback towards the blue line, it should bottom around there, and then we'll buy it there for a move higher. Does it happen all the time? No. It will happen most of the times, and then eventually the trend will change. When it will change, there is no way to know. Okay, this is not a predictive algorithm. This is my charts are used for decreasing your risk. Because you're buying at a better price. You're waiting for the price to come to you. You're not chasing the price higher. I mean, yeah, you can buy up here, but what if it decides to correct? You're going to be sitting in the position for a while, especially if you're using options. If you're using options, then you could just completely lose the entire premium, because we don't know how long it's going to take before your strike price is hit. So we'll minimize the risk by waiting for the price to come down towards where you want to be buying. And at this point, I want to be buying at around 2,230. The blue line currently is located there. So for now, let's wait and see what's happening with gold. I mean, if you bought it back here in February, this is week of 19th of February, then you're in great shape. Consider taking profits, perhaps. So let's wait and see what happens in the next few weeks, especially if the dollar gains. Dollar still is dangerous for gold. Dollar is not dead. Dollar is still in an uptrend. If dollar moves higher, dollar gets more expensive, dollar gets bigger. Gold is traded in US dollars, so XAU divided by USD. A bigger bottom part of this equation, denominator, will pull this currency pair lower. So I think this is what's going to be happening in the next few weeks. Dollar will get bigger, gold will get smaller. And let's finish up with oil, light crude oil, ticker symbol on tradingview.com. Okay, notice I always use futures to analyze oil. I never use this thing, USO. Okay, USO is made up of I believe like futures or options. I think it's future. I think it's options on the futures or something like that. So they expire, they get rolled over. There's what's called slippage. So always analyze the underlying security. You can do CL1 exclamation point. You can do US oil. It's a contract for difference. You can do UK oil. It's also a contract for difference if you are in Europe. It's basically the same thing. I like to use the futures. So what is the futures? What is the future telling us? So let's look at daily chart first for oil. So again, daily just means each candlestick is 1 day's worth of activity. Crude oil is, technically speaking, still in a downtrend. Okay, these are downward facing arrows. There was not yet a close above the blue support resistance line. Notice what happened. We came super close right there on the 5th of July. Came very close to a new bull market for oil, but we have not entered it yet. Okay, so now we're actually approaching another trigger point. And what is our trigger? It's pretty obvious from this chart. Our trigger is a close below the red line. Okay. When we see a close below the red line, that's our trigger to sell oil short. Okay, so let's just pretend for a second that, let's say Monday, we will sell it short if it closes below this red line. Everyone with me? Let's look at weekly chart and see where this is headed. So you can kind of see that we are currently around 77, and if oil closes below the red line, it would be somewhere around 76. So we can expect a move down at least like 7 to 10% towards like upper 70s. Lower 70s rather. What I did here is I highlighted this area with the square, and I just wanted to show you what is my thinking here. So notice that pretty much when oil attempted to pierce through this area of around 65 to $70, it has been stopped consistently. So many times. Notice back here in December 2022, in March 23, May, June 23, December of 23, January of this year 24, and finally right there where I'm hovering, in June of this year. So far oil has failed to kind of get below this floor, and I wrote it here as roughly $63 to $71 area. So that's what I'm saying is if we sell it short around the red line, we can expect it to at least move towards like this yellow support resistance line, which is around $72. Could it continue lower? Yes. We had precedents. For example, here in May, it got down to $63. Can it continue lower? Well, I certainly hope so, because maybe we will discover a new energy source. Wouldn't that be nice? I keep thinking about things like fusion power, you know. If I had like a magic wand and the next president of the United States, and I told him or her, you know, drop everything. Don't worry about anything but one thing: fusion. If you can get the fusion going, if you can have unlimited energy, then pretty much everything else is irrelevant. Reason being is this: you can have, if you have enormous amount of energy, you can have enormous lasers. Okay, I'm thinking out of the box here a little bit. With enormous freaking lasers, you can shoot down any ballistic missile, any projectile that will be lapped by any adversary, such as Ruskies or the Chinese or the whoever else we don't like currently. So hopefully we're already seeing it. If you read the news about Lawrence Livermore, so I'm gonna do Lawrence Livermore fusion. So we had an ignition already. Okay, they repeated this experiment again. So we had 2 times, oh, actually 4 times to date. Okay, so they were able to ignite, they were able to do a fusion reaction in a controlled manner for a split second. But the point being is it is already achievable right this instant. We just need a bigger investment in this, I think. So hopefully, if we short oil here, it will continue lower. What do you guys think? Let me know what your thoughts are, especially on fusion. I'm really interested. Of course, on oil as well, gold, stocks. Let me know what you want me to cover in the next video. And if you are ready to sign up, head over to masterchartstrading.com. Click on sign up for one of the products. Again, I have the trading indicators, these lines on the chart. You can have them on your chart as well. TradingView.com is free. You need to open a free TradingView account. Go to my site, Master Charts Trading, sign up there. I will open the door for you at $24.95 per month if you buy a yearly subscription, $29.95 per month if you buy a monthly subscription. Newsletters, again, these are daily alerts about various securities we trade, as well as weekly members-only video that I send out to my subscribers. For example, the difference in this video is that we'll be covering market breadths, junk debt, copper, natural gas, Bitcoin, and Ethereum, all in the members-only video. So I would consider, if I were you, I would consider signing up. And of course, the best deal is to get both indicators and newsletters at $49.95 per month with a yearly subscription. I think it's a steal, and you can make tons of money, especially if you trade options. I have people who trade options, and they make tons of money. You can also sign up for monthly subscription, and all of my plans have a free 7-day trial, so you can cancel, no risk. Thank you for watching until this very end. Please don't forget to hit the like button, subscribe to this channel, make a comment, share this video. Thank you for watching, and have another great trading week. Bye bye.